Why inflation is still stubbornly high. And knowing which way the inflation is going, we will be able to get ahead with all our investment because when inflationary numbers are strong, the central bank will continue its rate hike. And with a higher interest rate, the stock market will come under rate pressure. And the formula that I'm using is commodity prices leads the inflation data, and the inflation data leads the decision of the central bank to hike the interest rate. Just by studying into this formula and its time leads between them, we will be able to tell which way inflation is going from this point onwards. And before we discuss about this formula, please do take some time to read into the disclaimer. How do I tell that the inflation is still on the rise? By studying into all these commodity prices. And during the COVID pandemic years, most market, including the stock market, reaches low. So is all these commodity prices. And let's look at their performance so far. They are all still on the rise. It also means that the inflation should be still on the rise. But there is a very similar characteristic that most of them, or in fact all of them, are bearing right now is that since the low, it has went up tremendously. So over the last 12 months or last 1 year, it has did its retracement. And seems like almost all of them are making its U-turn again. What I'm suggesting here is that, in fact, the bull is already in the making. This is a retracement, and seems like this bull is a resuming bull. And let's study the time leads and lag between three of them. And first, let's study the relationship between the commodity prices and the interest rate. And we all knew that the commodity prices reached its all-time low during the pandemic in April year 2000. And we also knew that the crude oil, and what we're studying here is the crude oil, that also have rebounded and reached its recent all-time high in March 2022. But it only took the Fed, the US Central Bank, about 2 years later to decide to hike its interest rate from 0.25 to 0.5. Now let's look at another example here where the commodity prices lead the inflation data. And what we could see here was that in March year 2022, the oil reached its all-time high, and over the past 1 year, it has did its retracement. Now, as it reached its all-time high, when did the inflation data CPI registered its all-time high at about 9% before it started to dip to around 3%? 3 months later. And we could see that this formula here is commodity prices move first, followed by inflation data to pick up later, because these are raw prices and the agency that tabulate all this data need information from commodities. And the central bank will study into all these commodity prices and to decide whether to hike or to ease the interest rate. And what we studied earlier was that my observation, and I believe the central bank observation is the same here, is that most commodity prices are still remaining too high to ease any interest rate. Now let's look at our study back then in April the 10th, 2022. So then my study was because of the OPEC Plus, and it seems like they have been coming together stronger than before to decided to reduce the oil price production. And we all knew that the commodity prices that affect them is due to supply and demand. One of the reasons, and for them to decide to come together to reduce the oil price, definitely will cause the prices to elevate. And then this was my take, where it formed a gap, market gap up, and I believe it will move up, you retrace, and ultimately you'll break this around $90 and continue to move up from there. So what's the end result? About 5 months later, and we could see here that the oil price is breaking this primary downtrend line right now here. Let's look at the oil prices. It will be very similar to rest of the commodity prices, and those prices will ultimately affect the inflation data like CPI or PCE. Over the last 1 year, and this is what I did, knowing that there's this retracement that's coming, as a mid to short-term trader, what I did was my focus was to sell into strength, knowing that the mid-term is coming down. I've planned that along the timeline, once it breaks this primary downtrend line, which is just did a few days ago, and it also confirmed by the OPEC Plus decision to continue to reduce the supply. With a lesser supply, oil prices should go up. So moving forward, my plan is that as a mid-term to short-term trader, my plan is to buy on retracement. Let's go back to this formula again. Where are you seeing the commodity prices moving from here? Earlier we studied this group of commodity prices. It seems like they are making a U-turn again in this resuming bull. My suspect is that commodity prices will continue to move up and the CPI number will pick up subsequently. So the central bank will likely to maintain or hike the interest rate. What are you seeing here? I know that I've been describing quite a bit of risk here, but my take is this. If you know what's the risk lying ahead, just right ahead of us, are you seeing still risk or are you seeing opportunity? I'm seeing opportunity here. I always enjoy studying the correlation between the markets and to uncover potential opportunities. And I hope today's sharing will be helpful in how to invest and trade. Feel free to leave me any comments below. I love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.